Welcome back. There's another big news that we should be discussing. News that happened last week or Friday. It was all over the place. UltraTech Cement picked up nearly 9% stake in Star Cement, and that cost was about 850 crore. That clearly indicated that consolidation in the cement sector is in full swing. The transaction is expected to be the first leg of a bigger buy. Of course, one is expecting an open offer sometime. We have Rajesh, Ravi, the institutional research analyst of cement at HDFC Securities with us. Rajesh, good morning. Really kind of you to join us, like I'm telling every one of our guests on a holiday week, so to speak. But this is big news that's happening. The deals are not taking a holiday in the cement sector. How would you read this? Is this consolidation more price competition? What's the first takeaway?
Hi, good morning, Latha. Yeah, and thanks for taking me on the show. And so, on this deal, what has happened? Yes, this is something which was not anticipated because UltraTech acquiring into Star Cement, the block deal data which has come in, they have acquired 8.3% stake from Chamaria family. And what we understand from the data which is available, the Chamaria family in all together owns close to 14% stake in the company, and they were looking to exit the business for their personal reasons. So, this deal may be slightly different than what we saw UltraTech acquiring into India Cements, is what we understand. There are three set of promoters within the company, the Chamarias who are partly sold out, then there are the Agrawals, and then there are the Bhajankars. And what we understand from our earlier interactions with the management, the other two are quite committed to the business. And if you see, Star Cement has been doing great in the Northeast market. They are the top two players, and they are cash-rich company. In terms of even post their expansions, we don't see any risk, on the balance sheet. So they don't require anything per se, and they are doing great in the Northeast market. They've just commissioned their clinker, and they have 4 odd million ton of grinding expansions which are under progress. And Northeast market per se, they are making anything between 1,500 to 2,000 rupee per ton of EBITDA, which is the almost 2x the industry average. So Northeast remains a core market, and they have, the Bhajankas have started this business from scratch, and they know the Northeast market the best. Okay, if I have to put in. So to exit the Northeast market for them, for now seems to be not a comprehensible topic. But again, from UltraTech perspective, this obviously they would have thought through something. But prima facie, it could be they would be blocking out the Adanis, by acquiring one of the available stake from the promoters.
Okay. So got that. So in your opinion, Star Cements will remain in control of the existing promoters, the other promoters, the Bhajanka family. So it will be majority control. And for UltraTech Cement, it's just a foot in the door right now for them with this minor stake. What about the valuations at which the deal has been done? We have a price of 235 rupees per share. How does it stack up versus the other recent deals that we've seen in the sector?
Right. So they have paid close to $100 per ton. If I look at the implied value at the current price, the declared price is 227 rupees, which they have finally paid out to the Star Cement promoter. So that is close to $100 valuations which they have paid out. Now, obviously, this is in line with the value, recent deals we have seen across South, East on an average. But Star Cement, as I said, with 1,500 to 2,000 rupee EBITDA per ton of outlook, and Northeast market remaining a great opportunity market, given that the government focus on defense and the Northeast states developing, and Star Cement and Dalmia remain at the forefront of this opportunity. This asset can easily command anything between north of $150 valuation for sure, compared to sub 1,000 rupee margin outlook for any assets outside of Northeast region. So current deal has happened at $100, but if at all the deal has to go through, if the other promoters were to sell off, I would believe that they would not look at anything below $150.
Okay. Well, Rajesh, just want to know whether this has any impact on cement markets itself. We had one of the cement majors telling us that there's so much capacity underutilization at the moment that there is no price war just because consolidation is happening. Would you agree? And when do you see perhaps capacity getting adequately utilized?
This is an interesting topic because see what has happened is nameplate. There have been a lot of consolidation which has gone through. Last 1.5 year, UltraTech and Adani leading the race in terms of consolidating. But the fruit of this consolidation, in my understanding, will take at least 8 to 9 months to play out, because the recent acquisition, you start with Sanghi Industries, is still heavily underutilized. Thereafter, you saw Penna and then Orient and India Cements. All these four assets across South and West markets, they are underutilized assets. So the new owners will have to refurbish the factories and start, revamp the utilization to 70% plus. That itself means you have good amount of surplus, new capacities which are coming up. In addition to this, there are almost 40 to 50 million ton of new expansions which are announced per annum by various companies. If you look at the 10, 12 companies, they have announced expansions. So per se, this is the challenging, thing that we are looking at. While we see nameplate capacities getting consolidated, the benefit of the same has not yet been playing out. This financial year is on a slippery slope in terms of margins because prices are not holding up. It's too small compared to the cost inflation which the industry is going through. So next year, second half, if the top 2-3 players start to think in terms of raising their margins through a better pricing, only then we could see some benefit of the consolidation. However, last point, if I look at from a 3-year, 4-year perspective, yes, the 3-4 year down the line, we will have the top 5, top 7 players commanding more than 65% of the capacities. And from that perspective, the pricing power has to recover, and thereby the industry margin, which is less than 1,000 rupee today, should look up north of 1,000, 1,100 rupees per ton, riding on the better pricing outlook.
Rajesh, thank you very much for joining in. 2024 stood out for the kind of consolidation that we've seen in the cement sector, with the two large conglomerates, the Adani Group and UltraTech Cement, snapping up so many assets in terms of M&A. So now the cement companies, though, will hope for a better 2025, because last year the volume growth was fairly muted for the sector. But